People ask me all the time, Frank, what do you invest into? Today, I'm going to be talking about one of my favorite investments, which is dividend investing. So stay tuned. Frank Thomas here from Wealth Generation Strategies, and today I'm going to be talking about dividend growth investing, or just dividend investing if you want to call it that. Reason why is it is my favorite form of passive investing. It is one that a lot of people don't have the stomach for, funny enough, but I feel that it's one of the safest ways to invest if you follow what I'm going to be teaching you in this video. And make sure you stay right to the end of the video because I'm going to be showing you some other areas where I like to invest outside of my dividends, but you got to stay tuned for that. And you don't want to miss it because it is actually, some of the things I'm going to talk to you about are just like, oh, I never thought of that. And that's what things I've come across. So stay tuned right to the end. But today we're going to be talking about learning how to get into dividend investing. What I recommend that you do is you take some time and figure out how to set up an account with a broker somewhere. And you have to do that first. When you're buying stocks for companies and you're buying dividend stocks, the whole idea behind it is the company's paying you some of their profit back at the end of the year. So that's an important point. The company's actually making profit. Very important. And they're going to pay you back some of their profits on a yearly basis. Now, sometimes the dividend is only 1 or 2%. Sometimes the dividend's 15% or 20%. Depends on the company. I have found that most dividends will be around 4 to 7% for good long-term companies. And I'm going to tell you how to find these long-term companies in just a few moments here. Now, I would say to you, those are the stocks you want to invest into because for the long run, it's going to give you a way to start building a strong retirement base. Now, you would think, well, Frank, 4% is not very exciting. I'm only making 4 cents on the dollar, and if inflation is 3%, I'm really only making 1%. You got to look at the other side of things, and that's the growth side. Remember when I said dividend growth investing? We're looking for stocks that are dividend stocks, but they're also growing in value over time. That's where we make the difference between the dividend and the actual overall portfolio value. Is we want to see in the long run, the stocks that we buy are gaining in value year after year after year. Now, I'm going to be straight up with you. I read this in a book one time. It was such a good illustration. The stock market is a lunatic. There's days that's going to come to you and try to sell you a stock at ludicrous prices, like way overvalued. And then they'll turn around and come to you the next day and they're trying to sell you that same stock for half of its value. That's the stock market. And you have to get used to that. One of the things that I do when I do investing, and I do investing on a regular basis, is to do that. Every month when you get paid or bi-weekly, you set aside a little bit of money and that goes into your broker account and you can buy stocks. When you buy these stocks, you are going to be buying them slowly over time. For example, I was buying Coca-Cola stocks. Now, Coca-Cola is a brand that's known all around the world, and that's why I'm using them. Another reason why is they're called the Dividend King, and I'll be getting into that in just a moment. The reason why I've been buying that stock is because it's a brand that I recognize. It's a brand that I know people consume and use, like Pepsi, Coke, it doesn't matter. Two different companies, but both in the same arena. So look for brands and stocks that you are familiar with. Now you would say to me, Procter & Gamble, how would I be familiar with Procter & Gamble? Do you use hair products like shampoo or conditioner or soap, or do you use creams and stuff like that? It's all P&G, Procter & Gamble. Look at the back of your shampoo and you might discover that it comes from P&G or Procter & Gamble. You're using these products and so is everybody else. Where does your toothpaste come from? Procter & Gamble. Believe it or not. There is a very few companies in the world that own most of things. Another great company, their dividend is not great. I don't love their dividend, but their overall stock value is quite good, is 3M. The stock symbol MMM, 3M. Now, they supply things like bonding agents like tape and glue and other chemicals like cleaners and stuff like that. Like another great company. Now, other companies to look into and investing into are things like the energy company. You use electricity every month. You might be using natural gas or you might be using heating oil or whatever. Find out where those local companies are. In the United States, a big one is Duke Energy. Invest into them. In my retirement account, I can invest into U.S. stocks without any holdbacks on increases in the actual or returns on dividends. So I have stocks with Duke Energy. Other ones in Canada are things like Fortis Energy. Enron is another one. I have stocks of them as well. There's lots of companies you can invest into. Other industries are the banking industry. In Canada, it's big business in Canada. In the banking industry, we have the Royal Bank, we have Bank of Montreal, we have Scotiabank, we have Toronto Dominion Bank, or TD Bank they call themselves now. And I have investments in some of those banking stocks as well. Little secret, don't buy the bank's products, buy their stock. That's where the money is. Just a little hint there. So invest into the things that you know. Another really lucrative area is into property investment stocks. There's lots of different stocks. I have stocks that there's a big company in Canada called Canadian Tire. They've come from being a grassroots company to being a fairly big brand in Canada. So I invest into their land as well as into their store stocks, and they're completely separate stocks. They have good returns. No, the whole idea is they're collecting rent from the stores that they're leasing the land from. What happens is you get a bit of a dividend from that at the end of the year because they've made an excessive profit on that. And that's what you want to buy into. It allows you to buy into real estate without buying real estate. And I really like that. The reason why I love it too is because I find that dividend investing is fairly hands-off, and it makes it easy to do. Do I change my stocks all the time? Am I like a day trader and I'm scurrying around and changing stocks and, I gotta buy, sell high and buy low and do this and I gotta short it and I gotta... No, I just buy the stock. Rarely do I sell a stock. I'll normally buy the stock and just sit on it. And I'll warn you, stocks will go up, stocks will go down. But over the long run, stocks will slowly go up over time. I found that most of the stocks, which I've recommended, have a growth between actual value of increase as well as dividends, will return at least 10% on a yearly basis, which is phenomenal. Like a lot of people say that the average S&P, like this S&P 500, is only 7% on a yearly basis. I find that if you stick to what they call dividend aristocrats and dividend kings, you're laughing all the way to the bank. Now, that's what we're going to talk about next, is the dividend aristocrats and dividend kings. A dividend aristocrat is a company who has given out dividends every year and either keeping them the same or increasing them for at least 25 years. That gives you a lot of security to putting your money and investing it, because let's face it, when you invest into a company, it's a risk. It's a gamble. If somebody came to you and said, hey, I'm starting a new business and it's business XYZ and it's going to be the hottest thing on the internet and it's great, yay, you got to get involved. It's very speculative because it has no history. But if somebody comes to you and says, yeah, you can buy this Coca-Cola stock, it only has a dividend of 4.7%, but it's a dividend king. Now, a dividend king is a stock that has shown steady increases in the dividend over 50 years. That's a very, very secure stock to invest into. Rarely will a dividend king crater. It does happen, but if you stick to things that you know, things that you use, and if you're using them, so is everybody else. Everybody's using that electric companies. Everybody's using the shampoo. Everybody's using toothpaste. Everybody's using electricity. Everybody's using that bank down the street there. Everybody is using all these different things. Like they're going to Canadian Tire, they're going to your Target or whatever it is. Invest into those things that you use on a regular basis, and they prove themselves by being either an aristocrat or a king when it comes to dividends. They've shown long-term growth success, and you want to see that. That's what's really, really important. Now, don't get panicked if the market goes down. A lot of people freak out. People love doing freak out videos on YouTube. The market's crashing. It's over. Sell, sell, sell. No. If you've bought quality stocks, you sit on them. If anything, you buy more. You got to learn to be like a fireman. You notice that everybody's running away from the fire, and firemen aren't running away. They're running to the fire. You need to learn to become a fireman. When Coke is on sale, I call it the Coke's on sale. I find it's an easy way to say, hey, the price is down. Coke's on sale right now. So I buy extra Coke this month instead of the normal amount, and I might buy less. Insurance is another one. I buy less Manulife in Canada because it's usually up when Coke is down. Some stocks are like that. They operate in almost inverse of each other. So I won't buy as much Manulife because it's a little high right now, but Coke is down, so I'll buy more of it. So what happens is over time, I know that that's going to come back up and it's going to do well. I remember Years ago, I had about 100 grand in the stock market, and I watched it tumble to just under 50 grand. It was like $49,000. And I was like, even I was sweating a little bit at the time. Now, I knew that stock markets recover themselves, but I was sweating. My wife saw the stock balance, and she just about she had a kitten. She was like, Frank, we've lost $50,000. And I said to her, sweetheart, it's not a realized loss until we sell the stock. And you need to remember that. Back to rule number 1, we bought quality stocks. We bought Dividend aristocrats. We bought Dividend kings. We bought stocks for products we use all the time. Or what was it? Briax. There's a few stocks that were big and public stocks, and they went into the toilet. We didn't buy those. And also too, you notice that I talked about different industries. This is called diversification. We're into entertainment, which is Coke. We're into 3M, which is household products. We're into P&G, which is again household products, personal aid products. We're into energy companies. We're into insurance. We're into banking. We're into different sectors of the market. When one is running, the other one's resting. Overall, we usually do good. Right now, the market, to be honest with you, is a bit down. It jumped up at the end of 2023, and it's kind of fallen again in 2024. That's fine. I know that that's what the market does. The market makers in the market, the way they make money is not keeping the price static. They make it by running the price up and running it back down, running the price up, running it back down. Remember when I said the stock market's like an insane lunatic? That's why. You got to get used to that. We're not selling those stocks. If anything, we're buying the stocks. We're being like firemen, and we're running to the fire. We know it's a good stock. People are not going to stop drinking Coke because it's dropped by 20%. They didn't even know it happened. They're just going to go to the store and buy a Coke, for crying out loud, because I've always called Coke or Pepsi a poor man's luxury, because it's only a couple bucks and it feels like you got something. Yay, look at me, I have a Coke. This is awesome. So that's the reason why I love Coke stocks. Now back to my Coke stocks. I went from buying a little bit of Coke stocks. I think I had about $1,000 worth of Coke stocks. I'm sitting on close to $20,000 in Coke stocks now, and it provides a nice little dividend. And I've watched the price go up and up and up and up, and it's one of my most stable stocks. Now, would I just invest into Coke? No. There's no guarantees in life. There never is going to be guarantees. Coke could crater tomorrow. The likelihood is very small, but it's not zero, is what my point is. I do have stocks with 3M. I do have stocks with Procter & Gamble. I do have stocks with Enbridge, and I got stocks with Fortis, and I have stocks with Canadian Tire. I have stocks with lots of property management companies. I have stocks with Manulife. I have stocks that are speculative stocks. Some of my stocks that are good dividend stocks that are speculative. Also, too, another one we could look into is investing into something called ETFs. And they're called exchange-traded funds. An exchange-traded fund is a lot like the older mutual funds. Way back when they had mutual funds. Now, the trouble with mutual funds is they had a high cost to own them. In other words, handling them, they were charging 1 or 2%, and it really ate into the profits, and they made them pretty much unworthwhile. Now, the whole idea behind a mutual fund or an ETF in a lot of cases is they'll gang a bunch of these really good stocks. Like they'll have Coke in it, and they'll have P&G in it, and they'll have Iron Mountain, and they'll have all these different stocks in it, and they'll have Oracle in it, they'll have Apple in it, and they put it all together on the whole pretense that they've diversified the portfolio enough that when one is losing, the other one's gaining, so they can give out a continuous and even dividend and make it, but they do put out an even stock balance. But the idea behind an ETF is they have low management fees because they have low people costs, because the stocks are just automatically bought on a regular basis and added to the fund as people buy the fund. So it makes it very inexpensive for these fund companies to actually manage and hold these funds for you. I think they're a good option. I do have some in some very speculative ones, like TSLY, which is a derivative of Tesla. Now, do I own Tesla stocks? No. I think that they're too up and down. Like the Tesla stock is controlled by one man, Elon Musk, and it's not that the guy is wacko jack or anything like that, but it scares me when one man has so much control over such a valuable asset. He can say something and cause that company to go in the toilet overnight. Also, too, he doesn't have enough history, in my opinion. He's not an aristocrat. He's not a dividend king, so to speak. So that's something to look at, too. Now, but before we get into our bonus, and again, you do not want to miss this bonus. I'm not going to be talking at all about stocks anymore, but I do recommend that you invest into stocks. But before we get into our bonus, I'm going to be talking about a few things here that I think are precursors to buying stocks and will help you buy more stocks in the long run. But if you're enjoying this video, subscribe today. Make sure you subscribe. Join the tribe here at Wealth Generation Strategies. There's a lot of great videos on the channel already, and I have a lot more coming. So let's get into our bonus. Now, there's other places I feel that you should be investing before you start heavily investing into your retirement portfolio, which is your dividend stock portfolio. You want to invest into that. I've always called that my end game. But to get to my end game, I got steps along the way. I've got side detours, I got trips I got to do, I got things I got to do to help boost my efforts to my end game. One of them is I recommend that you invest into education. Now, it sounds crazy. Oh yeah, your education again. Yeah. You know something? I'll give you a perfect example. I have been in IT or computers for pretty much my whole career now. I was doing more the break fix, the server repair, things like that. I was more of a network admin guy. I had become a CTO or a chief technical officer in a company. But I kind of saw a ceiling, and I was watching companies where people had developers, and the developers could buy into the company, whereas they didn't offer that to anybody else, because developers have always been expensive. Always been expensive because there's always been a lack of developers. There's more that needs to be developed than there are people to develop. So I looked at that and went, isn't that interesting? And I also did a little more research and discovered that worldwide, when I eventually decided to do my training, worldwide, they were short worldwide by about 1 million developers. And I went, wow, you want to be in an industry that needs more developers. What's not got code in it anymore? You buy a toaster and somebody's coded it to toast your toast. Why? I don't know, but they did. Make a long story short, I invested 14,000 American dollars into a course in a year in my life. It was an intense boot camp for 1 whole year, and it brought me to a place where I was a competent programmer at the end of it. It was a huge investment. I always look to see, when it comes to education, is it going to be an investment that's going to pay me back in a discernible amount of time? In other words, is it going to pay me back in a year or 2 or 3 for what I put into it, and continue to pay me back in the long run? I didn't go take basket weaving. Now, I'm not saying basket weaving is bad, but it's not going to make me the money that programming will. So I did this course, and the first job I got after I finished the course, I was getting paid about 30 or 40% more than I used to get paid in my previous positions. It paid for itself in about 6 months, literally, which is crazy. Let me just summarize this. You want to invest into things into your career that are going to boost your salary, because it's going to provide you more income. If it provides you with more income, you have more power to buy more stocks, and you can build that dividend portfolio even faster. Second thing is, if you're married or if you have a significant other, invest into your spouse, into that significant other. Increase their education, increase their ability. My wife was big into quilting, and she really enjoyed doing it, so I invested a lot of money and time into making sure that she became a very proficient quilter. Now she can earn as much as I can, which is insane, just doing quilts. I don't downplay that or anything like that. I think it's wonderful because she's an artist in what she does. But the truth of the matter is, I would have never guessed. All this education she's gotten, and also too, which was my next point, is the tools I've invested into. I invest into tools to increase my trade. My computer system, I spent about $30,000 on, and it pays me back every single day. My wife's quilting machine, about the same. Pays us back every single day, because provides a higher barrier to entry for everybody else, which means it secures my position to make as much as possible. The other place is to think frugally in other areas. Look for ways where you have to make big purchases. Look to see if you can spend a few extra dollars up front to save yourself a whole bunch of money down the road. For example, is if you go to buy a new or relatively new car, like a used car, but it's relatively new, look to buy a hybrid over a straight gas car. Why? They both use gas, yes, but the hybrid has 2 advantages. First of all, it uses less gas, and the tune of about 1/3 to half the gas you would normally use in a normal gas car. So you're going to save money off the kick in the long run on that alone. The second thing with a hybrid car is your brakes will last an incredibly long time. Your alternator, a lot of the systems that wear down over time last a very long time. I've owned a Camry now for 8 years. I estimate that we've saved probably about $20,000 in the price of gas over the years. Plus also too, we've saved about $2,500 on brake jobs, because it's got over 240,000, approaching 250,000 kilometers on it. I've never changed the brakes, and I would have done 2 front brake jobs by now and at least 1 back brake job, about $2,500 all said and done. So it's worthwhile. Look into purchases you can make. If your dryer is dying, look into a heat exchange dryer. I don't know if they're any good, to be perfectly honest with you, but do your research. decide if this is for you, because it uses a third of the electricity of a regular dryer, and electricity prices are never going to go down. A little thing, we went and bought an induction stove over a normal heat stove. Reason why is it uses less electricity. I found that our electrical bill went down about 5 to 10% a month. Now, is it a lot of money? No, but it all adds up is what I'm getting at here. So I hope you've enjoyed this video. I've enjoyed bringing it to you. I hope that you get yourself into good dividend investing. There's lots of great videos on YouTube to watch. If you are Canadian, there's a fellow's channel. His name is Canadian in a T-shirt. That doesn't sound like an investor, but he's the guy who taught me how to get started in Canada, get myself started on Questrade. I'm sure you have Questrade in the States, so it would apply to you as well. He's got some great content there. He gets deeper into the stocks than I do, but I did want to talk about this because for me, this is my end game. This is where my passive income is going to come from in the long run. And if you've enjoyed this video, I've got a great video that came out earlier this week. It talks all about paying your darn credit cards off fast. And don't you want to pay those things off fast? Make them go away so you can invest more in dividends? I do. I do it all the time. Go check it out. It'll be on the screen now. If not, I hope you have a wonderful day and thank you for joining me today. Talk to you then. Bye-bye.